ISI Vice Chairman Krishna Guha. Krishna, great to have you back. I'm curious to know what you saw in the print that makes you think September may be more of a coin flip.
Yeah, so look, I think what we saw in that latest jobs report is further confirmation that the U.S. labor market is gradually cooling. Is it happening quickly? Certainly not. Is there imminent danger of recession? Certainly not. But the payroll numbers that had been the standout red hot feature of this labor market, they are slowing. That's what we saw in the data from Friday, not just the last month, but with the back revisions to the prior 2 months. Payroll gains still running well in excess of what will ultimately be a steady state for the economy, but they are slowing. Now, I think that gives us confidence, A, for sure the Fed's going to be going ahead with that hike in July, but if these trends continue, they probably would be willing to drop that second hike, which right now feels like it's penciled in possibly for November.
It kind of reminds me of what Ed Hyman's been saying the last couple of days, and that is normally a tightening cycle brings about some kind of crises. We got the taste of one in March, and yet they then hiked again, which Ed would argue is a bit unique, no?
Well, look, I think the Fed made the assessment in March that they could walk and chew gum at the same time, right? They were very aggressive with some of the financial stability interventions, like the new bank term funding facility to give banks cheap long-term funding for those underwater treasury and MBS portfolios, and taking aggressive actions on the one hand for financial stability, supporting the banks, gaining the ability to raise rates further. Now, I would say, in all fairness, looking at what we've seen since March, we have not yet seen very severe evidence, very substantial evidence of credit crunch or credit restraint emerging. I still think that over time we will see some meaningful credit restraint emerge out of the more stressed parts of the banking system. But certainly it's not been severe, and it's not very pronounced in the data so far. So I think the Fed can justify having continued with a little bit of hiking since then.